Thanks, Chrissy. Thanks for everyone for being here today. And it's been another great conference. It's the second year that we've been here, and it's great to see we're very well attended again. And so, Impact Minerals, we are looking to be a significant player in a little known but crucial metal and mineral that's part of the energy transition, and that is high purity alumina. And we believe that we're on a journey to become a significant player on the global market for this material because of a unique deposit that we have in Western Australia. And so we're on a journey to expand, get into production over the next couple of years. And so I'd like to invite you on that journey today. And that journey starts here at our Lake Hope project in Western Australia. And it's what I like to call the Magic Lake. And it's magical not just for how it looks at certain times of the year, but in the top 2 meters of that lake are a set of clays that contain something in the order of 15 to 20 US billion dollars worth of high purity alumina. It's all a matter of how straightforward it is to dig it up, process it, and then sell it to customers. And we have the right to an 80%. You can look up the details of that deal on our website. Now, it is a world-class deposit in my view. I've been the Managing Director of Impact Minerals for a long time, and I've looked at a lot of deposits, and this stands out because of the economics. Now, this is the results of a scoping study, which is really just an early stage look at the financials around this deposit, and we put this out in November. And there's a couple of things that you need to look at, and the first one is the net present value. That is basically the value of that material in the ground now if someone was to come up and buy it off us. 1.3 billion Australian dollars, or about 1 billion US dollars. That's huge. The second important thing is how much it's going to cost us. And I put this in US dollars. It's about 4,000 US dollars per tonne, and as we'll see, that's probably the lowest cost globally for this material as far as we know. So those are the two key figures. This is for a standard production of about 10,000 tonnes per annum of high purity alumina, and that's what we're aiming to get to over the next 2 to 5 years. So we'll look at those two figures in a little bit more detail. What does that mean? What's the value proposition around this project? So our current share price is about 1.4 cents. We released the scoping study in November, and a lot of people have been talking about the downturn and share prices running down. We're actually up 40 to 50% since November, and that's because I knew when we got into this project it would be a slow burn. As we tick off the milestones, we're going to get the traction in the market that we're looking for, and that is already starting. This is your time. IPT is the code, and you should definitely get us on the watch list now. And that means that our market cap is actually 40 million. So we're in a good position compared to many companies, but what we're trying to drive it to is the value of that project, which is 1 billion US dollars, 1.3 billion Australian dollars. And that means there's a significant growth to go here, 33 times potentially. And of course, many of you were here on the first day and you saw Tony Rivera. They had a 12-bagger since last year, and let's hope that we can produce something similar over the next couple of years as we go forward. So this is why you need to keep your eye on the company. We have significant upside. We've already got the deposit, already got the resource. It's a matter of developing over the next couple of years. And the real driver to that is actually the low cost, which I mentioned earlier on. This is what we call a cost curve analysis, and basically most production at the moment comes from the Chinese and the Japanese. They make their high purity alumina actually through quite an environmentally unfriendly and energy intensive process out of aluminium metal. And it's been a drive over the last 5 or 6 years by a number of players, mainly on the ASX, but in particular Alpha HPA, which is a very good success story in this space. They're driving down the cost of production to sort of 7,000 to 8,000 US dollars per tonne, but we believe that we can beat that significantly at $4,000 per tonne. And that's very important. HPA is a bulk commodity, and when you're in this space, whether it's silica sands or some of the other commodities you're going to hear about today, one of 4 things has to be true. You've either got to have the biggest deposit, you've got to have the highest grade, or you've got to be first to market, say like a company like Pilbara Minerals, who've done very well in the lithium downturn because they had established client relationships, or you've got to be one of the lowest cost producers. And when I first saw this project, I thought this is going to be one of the world's lowest cost producers, and right now we believe that it could be the cheapest producer by 30 to 50%, which is a world-class margin compared to everybody else. So what is high purity alumina? You're all asking for. It's basically aluminium oxide or sapphire, corundum, for those of you who are into your minerals. And generally there's a benchmark of purity about 99.99%, or 4N for 4 nines. It's listed on the critical mineral list for Australia, Europe and the US, which opens up avenues for us for funding through government and federal and state grants. So what's it used for? So for those of you who've got Samsung phones, you're probably grateful now that the batteries aren't exploding as they were a few years ago and causing a few fires. And if you're a Tesla driver, you're probably even more concerned about HPA because if your battery catches on fire, you're in for a long wait before it can be put out. So it's used as a separator. It stops thermal runaway in batteries, in particular lithium-ion batteries, and we've heard about, of course, the significant growth forecast for lithium batteries going forward. The second and probably larger market is probably a little bit boring in a way, but LEDs. So your lights, all the new lights going in the US have to be LEDs, and HPA is used extensively in those lights. Secondly, you're probably all getting your smart screens, your ULEDs, your OLEDs, Samsung, LGs. Huge growth in LEDs in smart screens, and we're seeing buildings globally now being covered in LEDs. And so the demand for that is also going to increase dramatically over the next few years. And there's also some very specialised uses, sapphire glass being one of them, for those of you that got smartwatches and all your smartphones in through there. So we talked about the lithium decade with Joe Lowry yesterday. Perhaps it's going to be the HPA decade as well. And here's the forecast supply and demand curves. And this is in retrospect. And this has been going. It's growing at about 20% per annum. And there's a forecast tightening of supply, sort of around about 26, 27. And that's when we hope to be getting into at least modest scale production in this commodity. So what's it worth? So as I mentioned, the 4N is the standard, that's the benchmark. It's currently trading between $15,000 and $25,000 US dollars per tonne. And if you recall, we can produce it at $4,000 a tonne. There are some specialty uses which have extreme margins, but there's not significant volume there. And there's also quite a good market in 3N, not quite as pure. And this is where the volume is, and this will be our target market in the first instance, and then look to try and get into specialist uses for HPA as we go forward. And how much alumina do we have? So in the lake, or the two lakes as we'll see, we've got nearly 1 million tonnes of alumina that we can dig up and convert into high purity alumina. Do the math, 1 million tonnes times 20,000 US dollars per tonne, you end up with a figure that's sort of 15 to 20 billion US dollars of material in the top 2 metres of that lake. This is where we are. We're in Western Australia. It is simply the best place to work in mining anywhere in the world, full stop, Tier 1 jurisdiction. And the lake is actually in the middle of nowhere. And so our resource lies within these two lakes, West Lake and East Lake. And one of the first natural advantages we can see is that there's a fire break and basically a haul road that runs right up to the edge of the lake. And our material lies in the top 2 metres of these two lakes here. So I will argue that it's the perfect ore body. This is Roland Gotthard. He discovered the ore body through some great lateral thinking. And this is how we drilled out 20 billion US dollars worth of material with a rubber hammer and a plastic push tube and an auger. And it comes out looking like this, plasticine. And this whole drill program, including the assays, cost us 60,000 Australian dollars. So it's the best return on a drill program you're ever going to see. And it's naturally less than 1 micron in size, mostly. It's incredibly small particles. And for those of you who've done physics, that means that there's a very large surface area in this clay material. And it means when we drop it into the acid to make this thing leach, it goes straight into solution. So it is very easy to dig up and mine. We believe that we've got 10 to 15 year starter pit in the East Lake alone. We're just going to drive in off the side with a truck, stockpile it, and then truck it off-site. So there'll be no on-site processing. So compared to hard rock miners, there's no crushing, drilling, blasting, grinding. That we don't need any power. We can do it on renewables. We don't need any water on site. So just going to dig up the clay and truck it off-site, as we show here. And very importantly, that leaves us with very limited long-term environmental risks. We're going to leave a hole in the lake that's probably about 1 metre deep, and it'll fill up almost as fast as we can dig it. So what that means is that we believe that the approvals for mining and the environment will go through relatively quickly. We've completed our baseline environmental surveys. There was no issues on the lake at all, and very importantly, we have native title clearance with the Naju people. Again, we've done the surveys, no impediments to mining on the lake. Subject to us coming up with a mining agreement, we will be able to go ahead. And again, that will speed up the entire approvals process. Now, I won't dwell on this, but one of the great things about this material is that it does allow you a couple of ways to actually make high purity alumina, and we're working through the process now deciding which one of those is best, and that's a key part of what we're doing now, which is a pre-feasibility study, which is basically looking in more detail at the scoping study and trying to get a better handle on the finances where we're going to mine the material, where we're going to truck it, where we're going to build the process plant. But we've got a very new method, low temperature method. Look for a video that we hope will go viral in a couple of weeks about we're going to make HPA in a slow cooker on our bench top. That's about how easy it is with this material. So pre-feasibility study, there's 4 pillars to this. The metallurgical test work is the key focus. We put out some results already this year. We've got more to come. And we believe that by the middle of the year, we should have plenty of HPA to start handing out to potential customers. We're working through the mining approvals process. We should be lodging our mining lease application now. We have our environmental surveys back in the next quarter. And we're also looking very closely at where we can build the process plant. Now, this is important because depending on where we build it, we can actually get access to significant government funding to help build, in the first instance, a demonstration plant, and then potentially the bigger plant as we move into larger scale production. And then finally, and this is the key area, so in bulk commodities, and we're in this session, we're talking about various bulk commodities, it is about the product marking, it's about offtake as well, and that is a crucial focus for us in the back end of this year as we get material through the test work. Now, I mentioned Alpha HPA. People might think, well, look, can Impact get to $1 billion market cap from the 40 that it currently is? So Alpha HPA was a junior explorer like us 3-4 years ago, had a market cap of about 20 million. They got into the high purity alumina space. They have their own special process. They've knocked the lights out. They're an extremely successful company, and their market cap recently hit $1 billion, and they're just about to expand into a 10,000 tonne per annum production. So we're going to try and follow in their footsteps. We'll do things slightly differently, slightly different markets, but just to show you that in this space, this thing can happen, and that's why IPT should be on your stock watch list. Impact Minerals, we've got 2.8 billion shares on issue. We've got a couple of $1 million in the bank. We've got about $1 million to come from various R&D rebates, etc. But we've been very strongly supported over the years by 2 major German shareholders who own about 23% of the company. One is a family office out of Dusseldorf, and the other is a well-known investor in the resources space. And they've given us plenty of support, and last year they contributed significantly to our last capital raise. So it's good to have their support. So this is where we are on the journey. We had a great year last year, maiden resource, scoping study, started the PFS. This year it's about completing, as I say, the optimisation of the test work. We will complete the PFS on schedule by the end of the year. Material off to clients to test, and we'll start to build a pilot plant which we'll complete next year and roll straight into a definitive feasibility study. And as I mentioned, we're hoping that the mining lease should be granted basically in a record amount of time, and that will allow us then to get stuck into a demonstration plant. I've called it a pilot plant there, but a larger 1,000 to 2,000 tonne per annum producer over in 26. And if we recall, that's when the deficit is sort of supposed to be happening, bit of tightening of supply. Hopefully the prices will be increasing even further. And so that's our story. We invite you to come on the story. We aim to be one of, if not the lowest cost producers of HPA globally. We have a unique deposit in a tier 1 jurisdiction at Western Australia. We've got a cost disruptive metallurgical process which is now full in PFS. And we're building out our capabilities in that MET test work, and we'll be building out our end product specification skills. And as I mentioned, we should hopefully be delivering into a high growth business with exceptionally high margins, and we're going to be a global supplier. So make sure that you come on that journey with us. So thank you very much.